Hello and welcome again on Stocks Advisor channel. In today's episode, we will talk about Luminar Technologies Incorporated, traded at Nasdaq, ticker name LAZR. Well, Luminar Technologies is in general on its correction wave, and the correction took place after the, let's say, the triangle formation was cancelled in December, February action, of course, after very enormous growth. So let's quickly looking at the history of the position. We saw this enormous growth was taking place, but then what happened is actually after we went for corrections, we saw that there was a formation of triangle classically here, and that's kind of a triangle formation, but it was not really clear. It was more like very slow triangle, let's say, not that sharp. And usually on the slow triangle formations, technically generally can also do it a little bit lower. Usually often what happens, they are cancelled, and that's exactly what happened here. We saw the cancellation, and next the price was declining all the way from mid of February here, and actually till mid of March. Then this was again rebounding from a very strong support resist line that we saw here just exactly at 20. We rebounded and made cascaded decline. What is the cascaded decline? It's when you are like a ping pong ball declining and bouncing from a certain level. It could be upwards move or negative move. So in this case, it's going with a negative move, with the top line, let's call it R1 as a resist level here. And then what happens, if you look carefully, the price action bounces, it returns to R1. So R1 works as a very strong attractor, but also as a strong resist. So the price goes, returns, rebounds, goes, returns, rebounds. And now we have the second rebounds, and we're sitting again in a very good resist line of 20. Let's name it actually R2. And the reason for this, why is it very interesting? Because now we have another triangle formation, and this is sharper one. It's R1, R2, and this could resolve in a positive way, because also there is still an attractive channel of previously unformed or declined very slow triangle here. So the level between 30 and 40 is a very strong attractor in general as a channel to trade within. So with this being said, actually we are already in a very interesting position. It's a double support. It's R1, but also moving average 200. This red line, you can see it. And by the way, we have always three moving averages depicted here on the left. You see their legend. So it's any moment expected to go high, to have a bounce, and we can therefore make our profit. And speaking of profit, we always advise at our channel, in our opinion videos, take profit from 10 to 15%, because that's how we do it as well. Sometimes on the fastly moving charts, we also advise taking profit at 15 to 20. Here it's somewhere on the boundary, but you can say keep it closer just to 15%, and then really enjoy it. If needed, re-enter, but really enjoy it, take it, and because until you take it, it's not yours. So it's very important. Don't try to become rich from one trade, because it could give a lot of negative experience. It's better to develop this tradition and philosophy and actually experience of trading multiple times with positive outcome. So with this being said, we are already in a very nice entry opportunity. So if you look at the levels to enter, so now let's speak finally about the levels to enter. This would be just between moving average 200, actually the current price, current lows and current highs, which will be just between 1921 and 2063 here. So let's write it down. So this will be 1921 and 2063. So this will make for us the first, let's write it again, 1921 and 2063. So this will make for us the very first entry opportunity based on expectation for immediate rebounds, and then actually the R1 will be, let's say, the attractor here, the first exit, and which will make exactly up to 15 or even more percentage. But still, what might be happening, of course, this decline might go a little bit lower. We could even pierce further moving average 200. Not completely expected though from technical point of view even, but still might be happening. And if this is going to happen, we just need to be prepared to buy at these lower levels that was mainly formed by price action in December. And this will be then the level between 15.87 and 17.12. So 15.47, 17.12. Let's write it here. 87. So 15.87 and 17.12. So that will be our next way, next channel, next opportunity to buy. And if this is going to happen, let's write it here as a call out actually. This would be still within the technical expectation, let's say, based on further continuation of this bouncing or ping-ponging decline from the R1 level, still keeping as a R1 as a very strong support for us. But this would be the end for the technical correction, because then it's really expected to return to R1 or even maybe pierce it further and go to the level 30-40, which will be for midterm traders the target. But for those who are daily traders, this will be really the final play here. And as always we do at our channel, the third level should be reserved for possible negative catalyst. Here it's hard to imagine going even lower, but still possible. And negative catalyst mitigation is actually the level, the principal level, where the price cannot go even lower from really those principal considerations. And this would be this channel, actually the first leg where the price move was forming in end of November, and this will be actually between 12.91 and 13.74. So let's write it here again. So again, 12.31 and 13.74. 74, yeah. Give 76, but actually you could pull it a little bit lower, because here it's a little bit unclear and decisive the high of this one. But let's put it a little bit lower just for safety. Will be 13.74. So with this being said, these are three levels to buy and to play. Still very classical trade though, and if you would ask how we enter here, because we always advise non-linear averaging down, so here it's still advised to play with 5 portions, very classical play, meaning that you buy with first portion in the first channel, then you can average down with 2 portions of money you would like to allocate in this position in the second channel, and then if negative catalyst kicks in while others will be taking losses due to a stop loss or any other considerations, you just buy in and prepare for exiting with profit, or in the worst case with a draw over the actually very small negativity, very small loss. Because this is difference in our channel, but what we do, we don't discuss stop loss, but we discuss averaging down. So it's so-called mixed analysis, where you spend a little bit more time, but you still want to exit with a profit or with a draw. And mixed analysis means that we do 3 in 1. So it's a technical analysis, it's a non-linear averaging down based on support resist levels. And the third one is actually risk mitigation due to negative catalyst anticipation, let's say. And therefore the last level is not the level that is expected. Usually the level that is expected to be traded, it's a first level. So second level is just let's say technical negativity, the further technical decline. And the third one is just to discuss mitigations if bad news comes in, simply speaking, how we trade, what shall we do. Instead of exiting with a panic, we just buy in, wait a little bit longer, and still make the profit here. So that's the way to trade with Luminar Technologies according to our opinion. So good luck with it. Don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.